even though right now we're talking about an hour, there's so many little things that you might not know or might not understand, and I explained this in detail. So this is just a sample from my course. For example, this is Lunar. This is a 52-week breakout play as well as a first Green Day bounce play. So you have two setups in one. This ticker was also the first big runner after a long time from 10 to 14. So we initially went from 14, 10 to around 44 in their first Green Day. And then pretty much we had a 52-week breakout of 50. In this situation, I did take it long at around 50 or 45 or whatever. And I did sell it somewhere into the 90s. So I did make I think it was like a 5-digit trade over here, just buying 52-week breakouts. So three of the most powerful setups for me in the past have been, first Green Day bounce, a first, 52-week breakout, and the first big runner continuation play. These three setups together create the perfect storm. They're, for going long a stock from 45. You see, so here from 45 up to 136. While these examples come once, don't come really that often, they do happen, and it's important to understand that 52-week breakouts are very important. And you just never short 52-week breakouts. Those are just rules of small cap as well as big cap trading. So we're going to move on to daily breakouts. This is Kerr. This is an example of a daily breakout. Cover more into detail in my course. As you can see, so here stock had trouble with 440. We had a clear line of 440, and we had a clear resistance, a 52-week breakout of 572. I go long as soon as we break the daily breakout at 450. I did sell it a little bit too soon at 550, and we got up in or less than 15 minutes here from 4 to 7. This is a typical daily breakout of Kerr that happened midday. Some of these daily breakouts might happen pretty much in the pre-market, but this example happened during intraday within my time slot of trading between 7 and maybe 11. So this probably was a great ticker that I did take profit. So this is a predictable. So what I like to do is I like to wait for the daily breakout of 434, and then we broke out over here and potentially buy the dip or wait for it to hold or buy it as soon as we broke out, which this is what I did. I bought it as soon as we broke out. We did back to the support line of 439 and then off to the races. This is a typical example of a daily breakout, and that was succeeding. All these tickers did have a float underneath 10 million. So maybe Kerr had a little bit higher, maybe 14 million, but I don't think Kerr had too high of a float. This is an example of a day two continuation. As I already told you guys that I have 15 examples. If you go into my website and go into my course over here, you see, you can see how many examples I have. I'm just giving you one of each. You have 52-week breakouts right here. Right here, you have 52-week breakouts, daily breakouts, day two continuation, first Green Day bounce, pre-market breakouts, and then you're going to incorporate VWAP. Then you're going to have intraday breakout patterns, and then you're going to have shorting. So I'm just going to go through a couple of slides to get you to understand. I just took them from my course and pretty much just going through them so you guys can review. Then if you want the full meat of the potatoes, just buy the whole course, which is over 15 hours long. So this is an example of day two continuation. This is a great example of day two continuation. So you see we popped up from 40 cents up to 134. And then once the ticker broke 139, the second day over here, I went long at 150, sold it at 190, and pretty much hit 240. So you can see the potential of day two continuation. I honestly waited until, ideally you want to buy it at 140 because this right here is the daily of INNM, and this is IMNM on the intraday. But we did had this wedge right before we broke through the yesterday's high, so this is what I call a day two continuation. And soon enough, you can see how quickly we went from 140 up to 240, almost $1 a share. So that's some crazy profits to be making 60% or 70% in just one trade. A couple of first Green Day bounce. I do like to review this one. It's one of my favorite patterns. I do have over an hour, 2 hour, 3 hours talking in the course just about this one. But and talking about it in less than a minute or two, just to get you guys introduced to what exactly I'm doing here. The first Green Day bounce was a textbook first Green Day bounce around the $1 area. You can see the stock popped up from 40 cents up to 280, and we sold off, and we never broke yesterday's high. Soon enough, yesterday's high coincided with a round number of 95 cents, and we broke 95 cents. We came back below. We tested 95 cents. We form a wedge pattern, and soon enough I went long at 95, 96 cents, and then I sold it. You can pretty much we went straight up to a buck 40. That is just a very sexy pattern right here. So it provided 42% upside from 95ish area. My buy point was around 95, risking off 90. So we held, and soon enough we got up to 140. Another example is a 7 a.m.